I am Bosteels from StageCo. StageCo is a platform where we bring together mentors, startups, and investors. The idea is that these people meet each other, so to do something together. The higher purpose is to increase the deal flow of startups in Turkey, as well as in quantity as in quality. So in the last 2 years, we see that the numbers of startups is going down. The quality is going down, so at StageCo we try to push this up again. So everybody is always asking me, and I see somebody, they're always laughing at me, he's one of the investors here in for 500 startups, why is he doing that? I'm not doing this because I get a stake of it, I don't get a percentage. I do this because I like to help young people. I was a serial entrepreneur before for 30 years in Belgium. I worked in London and in Paris. And when I came here, my wife is Turkish by the way, when I came here I wanted to do something totally different and not business anymore. Because I paid salaries for 30 years and I thought that's enough. So I paid my dues, so I'm happy with that. I would like to ask Amine to the stage and also Peter to come and we will discuss about something. Yes, good.
Good start. Thanks.
Only I have to ask, can you also please applaud? But we have young people who have been to my events already who understand that applauding is very important for me. I was very happy when they gave me e-invoicing. As a moderator, I said, oh, e-invoicing, that's an easy one. And then I opened my mail 3 days ago and they said, yeah, we just changed you now to blockchain in the financial services. So I was like, F you. So I did my homework. So let's hope we do this good. First of all, I want to start with asking you to introduce yourself first to the audience, who you are and what you're doing. I will start with my brother there.
Thank you. So my name is Amine Berraoui. I'm a founder and CEO of Tramonex. So prior to joining the startup scene, I've been in banking, investment banking for 17 years. And then we saw that there was a big move into the fintech space, into the startup and the change in the overall way people were looking to do business, together with a lot of very large banks pulling out from markets, pulling out from specific sectors after the crisis, and we saw an opportunity through technology to cater for some kind of clients and specific markets. In Tramonex, we got also we are basically a payment institution, so we do international payment. We provide technology around that. But a couple of years ago, we had a grant from the UK government to develop a prototype which is blockchain-based to do international settlements. And this is what we did over the last 2 years as a separate business compared to our mainstream business. And this is how we got involved into the blockchain space and into the blockchain community in general.
Yeah, I know that you're based in London.
That's right.
For regulation reasons, but where are you most active today?
Yeah, so we were based in London initially because we wanted to be regulated in one of the toughest jurisdictions. Because I mean, as people who know finance and who are familiar with the startups, one of the most difficult things is have access to infrastructure, have access to banking accounts, have access to banking partners to be able to operate. So if you are based in a non-that hard jurisdiction, let's put it this way, it's going to be difficult for you to have partnerships. So we chose to be based in the UK to get the FCA license first. So that's got like a pass, an overall pass, a global pass. And then from there, we started operating globally. So as of today, actually, most of our clients are not even European based. They're mostly based in Asia, Africa, and Middle East.
Okay, nice. Peter, you're also based in London?
Yes.
So tell me about your company and what you're doing there.
Sure. So Applied Blockchain is a blockchain solutions development firm. So we really specialize completely on just blockchain and building out full stack blockchain solutions for our clients. We're not a product company. We haven't built a single thing that we're offering. But instead, we work with both enterprise and also startup clients to build blockchain solutions. Just to clarify all this, it'd be really good with audience participation. Who here knows the difference between Bitcoin versus blockchain? Good. Who hasn't really heard of much of blockchain before the last couple of weeks or so? Good. Okay.
Can I ask you, because this is what I wanted to ask the audience a question. I'm thanking for this the pass now, because I will not put the ball in the goal now. So these people, so I saw hands going up. Mm-hmm. Can somebody here now from the audience, so who knows about blockchain? Okay. So keep your hands up. Keep your hands up. Who can in 1 minute here on stage tell me what is blockchain in 1 minute? Who dares? You see, that is the whole thing about blockchain and all the other things. Everybody knows, but if you ask them, tell me in 1 minute, when you're a startup, they say, can you pitch in 1 minute? But nobody can pitch 1 minute blockchain.
I tell you what,
are you going to do that now?
I tell you what they can do. They go outside and converse and have a chat over coffee and say, "Oh, I know this blockchain thing. Yeah, so we've been doing it for years already. Yes." And this is the same issue: is that everyone talks a lot.
Yeah.
No one really quite gets it.
Yeah. So you get 1 minute now. 1 minute. Then.
But the reason is, it's such a kind of intangible concept, right? It's not something you can go, oh, I've seen that. I've got a visual screen where I know exactly how that looks. It's this really kind of wishy-washy, fuzzy back-end technology that actually on the front end, and this is very important, on the front end, it looks exactly the same. So in terms of your users using a blockchain application, it's no different. They may not even know they're using blockchain. It's exactly the same as a mobile or web application they use today. So the trick is then, how do you explain this very complex, technical, nerdy stuff? And the issue with this, most people get up on stage, they talk about hashing functions and Merkle trees and consensus algorithms, this really nerdy stuff. No one cares about that stuff. And actually earlier today it was mentioned that the technology doesn't matter. What does matter is the journey, is the train, right? We said no one knows how the train works, but all you know is it gets you to the right place. In the same way, blockchain is a bit like that. As long as we can understand the principles, the benefits, and the real tangible business cases that you can actually take from this technology, that's what matters.
Yeah.
Right? And so we had a chat earlier about this too. The important thing here is not actually just the nerdy tech, but actually bridging that gap between business requirements and business heads and the technicals, and actually how you can bring those two together to create something real. And that's what we specialize in, and that's what you specialize in as well. Okay.
Does everybody understand this now? No, right? He didn't do the 1 minute, then.
Do you want me to do it?
One of the two has to say in 1 minute,
Okay.
What is blockchain?
So, the blockchain effectively is a distributed database that stores a registry of transactions and value across a peer-to-peer network. It's also a network of value exchange, which means that you have individuals on the same network can trust each other and transact values such as assets, currency, or data with each other instantly and almost for free.
Did you get that now? I got it, so that's good, because I am totally not in these things. That's for me very
I think
important.
it's important. I think it's as difficult as if internet now is 50 years older. But if you ask somebody to define what internet is, even in 10 minutes is difficult, right?
Yeah.
So you look at the effect rather than the construction itself.
Yeah,
exactly.
And I think just to add on what you're saying, I think the real added value that blockchain technology or distributed ledger technology brings is the main two for me. One is to remove the necessity of a centralized confirmation unit, or a centralized holding unit or distribution unit, and it's decentralized, it's peer-to-peer, as you said. And the second thing, because of the decentralization, because of the peer-to-peer, is the fact that it's very difficult to forge. So the level of security in the DLT technology is much enhanced versus the other technologies that we have as of today.
Can I expand upon that point, because that is absolutely central to the whole concept. I asked one of the questions before the previous blockchain speaker, and it's a current kind of the business model of today is that everything that's stored centrally and secured around a central location becomes much more secure. And we have prisons that have multiple layers of security around them. We have firewalls. We have all these things, right? And the idea is that if you store something in one place, it's better. Now, blockchain comes along and says, actually, it's far more secure if you store the same information across many different parties. And no one quite gets why that works. Everyone says, oh, it's far more secure. But why? Why is it more secure? Without going too technical on it, the point is that actually you're trusting no one. It's a trustless system that enables trust. Right? And try and work out what that exactly means. So the fact is
that 1 minute is way past.
we're like we have 45. But so the principle here is you're not trusting any single central authority with your transaction information. Instead, what you're doing is you're trusting almost nobody on the network. But what you are trusting is the economic selfishness of each individual party. Right? It uses basic economics to work out people will act in their own best interest. Now, if everybody acts in their own best interest across the same network, it means you don't trust anyone, but the consensus between everybody doing things in their own way means actually it enables trust. You're not trusting one person, but you're putting your trust in the entire society, the network, the members.
So now we bring this up. So actually, blockchain is a technology, kind of, as you said, a distributed database. Now, bringing this back to because it's about financial services now. So I also discovered something this morning, because this morning I did some homework. So everybody, of course, knows Bitcoin. Everybody knows Bitcoin, I assume. So what I didn't know is you also have altcoins. So then you have I saw the list is endless of actually, I not even only on blockchain-based currencies, but also on other based systems, these currencies. So if I say Bitcoin, everybody says yes. If I say, for example, Dash, Ripple, Steam, Litecoin, who knows all these things? You'll see that's less, and we only talk about Bitcoin. So what is Bitcoin towards the other ones within that financial system where we use blockchain as a technology?
So, go on, you go first.
Yeah, I think Bitcoin is the genesis of it, right? So that we have to recognize this. Bitcoin started it all.
Were they the first? Just a question: were they first, or the first to be acknowledged as important?
I think it's the first.
It's the first. Okay.
Unless somebody else claims the crown, I think so far it's.
Is it the Japanese guy now, or they're not sure yet?
They're not sure yet. So I think we have to acknowledge this. The fact that it's the first is also, if you look at market capitalization, it's one of the largest. It's 27 billion. The next one is around maybe 10 or 11 billion. So the next one is half of it. And then you go down to 8, and then after 4 or 5, then you go down to a few hundred millions, which is still a lot. But let's say it's nothing compared to the main one. So that's we have to recognize that it started it all. But then what people start focusing on is not, and this is why we are all here, is not only the cryptocurrency itself, is the technology behind the currency, and this is how blockchain started looking more widely spread, if you want. Because of course, compared to Bitcoin and cryptocurrency that initially were started by, let's say, as we discussed earlier, by more crypto anarchists, if you want.
Free spirits. Let's call them free spirits.
Free spirits saying, we want to be out of the system, we want to be free, we don't want to get monitored, etc., and which is that complete extreme. And then at the other extreme, you have the financial system, which is very robust, very traditional, monitored by the central bank, monitored by the authorities, etc., etc. And now the main thing is how these things are going to cooperate, how these things are going to come up somewhere in the middle. This is where people stopped looking at the cryptocurrencies as they are today and started looking at the underlying technology and see, how can we use this technology into the financial services to do not only the currencies themselves, but to do other asset classes, other services, other developments around by using the best of the DLT and still respect the regulation, respect the environment, respect the bank, the cohesion of the banking system as it's a bit better than it is today.
Yeah, but as of today, is somebody controlling it? If I pay you in Bitcoin, is somebody looking over my shoulder today?
Right. Let me expand upon exactly that point. You've got. Imagine two completely independent tracks going on right now. So this world of Bitcoin, which started blockchain. Blockchain is the technology that enables the application of Bitcoin. So it's a use case, a tool, if you like, which happens to be this kind of currency concept. But actually, what's happened then in the last few years is that's diverged. And you now have the crypto space, these altcoins, these anarchistic hippies who run around trying to throw money and give
hippies are modern, huh?
And the other side, then you have the real tangible benefits of what blockchain can bring. And I think it's very important at this point to understand there is a huge difference, and they're not one and the same thing. So right now, common conversations would say, Bitcoin, that's blockchain, and that's Bitcoin, that's blockchain, they're the same thing. They're not the same thing at all. The space that we work in completely avoids using cryptocurrency. We use this distributed database. We leverage the power of blockchain, the underlying technology, to do a whole number of things in regulated markets in a way that is completely compliant. So we're not touching cryptocurrency for that exact reason. But as you pointed out, I think there's going to be a convergence. So as we're moving further and further away, eventually there needs to be a movement towards actually how can we leverage this cryptocurrency but in a way that can be regulated and complies with the existing infrastructure we have. And that needs to be a case of central banks issuing their own version of the coin. Yeah. We need to have, let's say, the euro, the pound, the lira, whatever it is, issued by a central bank, controlled by a central bank, with all monetary fiscal policies. Everything else is the same. but leveraging the power of the technology. Only then can you start really implementing full-blown solutions that can be used across many different parties. So one of the key issues you have with blockchain right now is that you have a standalone solution that's built in this brand new technology, and it can't speak to anything else. That's no good, right? It needs to, first of all, interoperate with various other systems that you already have, of course. But second of all, the automated workflow that you can have using things like smart contracts, where different parties can form agreements. So rather than, let's say, conveyancing when you're buying a house, that may take months, because all the different parties have to sign, verify, and do all these different things. Instead, using blockchain, you could have that done literally in seconds, because all the verification processes are already pre-approved, and they just slot into a prescribed business process. The key factor that's missing from this entire beautiful world that already exists is the payment at the end. So right now, you can initiate a traditional payment, but you can't complete the full-blown cycle using cryptocurrency because of regulation.
Who thinks that paying in Bitcoin is cheaper than paying in euros? No? Is it more expensive?
It's because it's impossible to open the account.
Yeah. Let's ask them. Is it more expensive to pay in Bitcoin? So something you buy something in the store, it's 100 euros, and I pay with my Bitcoin. Do I pay 100 euros or do I pay 104 euros?
First you need to find a store that accepts Bitcoin. Right? And that's the biggest issue, right? Is that from time to time you see in the newspaper X accept. I bought my hamburger with Bitcoin. But I mean, the reality is that it's not tomorrow that there'll be a large adoption of Bitcoin, and that's for a single reason. Is again, we're coming back to compliance and regulation, because Bitcoin and because most of the cryptocurrency are not traceable. There's a big reluctance to bring them into the regulated financial system because of the anti-money laundering and the KYC processes that are in banking and financial institutions. So it's very difficult to accept money from someone you don't know, or you cannot trace, you don't know the origin of the money. It's very difficult to bring this into the finance. If you are in Europe, you want to make a €1,000 payment, you need your passport copy, etc., and it's pretty much similar everywhere. I mean, they've been talking about it this morning. And I think this is the biggest challenge. So first is finding that store that will accept Bitcoin. And second, there are plenty of exchanges, quoting Bitcoins against dollars, against euros or sterling. So then it becomes just an exchange rate. But I assume you always pay a bit of premium because that store is accepting Bitcoin, and because of the exchange fees that the exchanges themselves will charge you in exchanging your
I know Bitcoin. If you have a Visa debit card and you pay in Bitcoin, of course it is on his account in euros, but you pay 4% more.
Exactly.
Because of the conversion thing. Yeah. So I want to go back to, we are talking about blockchain, but I know that in his company, they're using Ethereum. Can you explain what is the difference between the two then?
Well, Ethereum is just a different technology. Distribution ledger technology, right? And again, they have their own cryptocurrency as well that they're using, and they're I think as of today they're number 3 in terms of ranking. But Ethereum is we chose in our company to use Ethereum for something that you briefly mentioned, which is smart contracts that you don't necessarily find in the other technologies. And smart contracts enable you to do conditional actions, right? So if X happens, then I can do Y. So as you mentioned, there are plenty of use cases. Escrow account can be a use case. If this transaction is finalized, then you release the payments. There are insurance companies looking at flight delays, for example. If this flight is delayed, then automatically pay €200 or 300, whatever, to all passengers in the flight to avoid insurance claims later. So the fact that you can program the smart contract and you can build them on Ethereum makes it a superior platform compared to the others from our perspective.
Yeah. So you're two businesses. So like you're talking about what you can do with these things. So I assume you have customers today. Are customers into this kind of things, or are you providing other things and you will evolve towards this?
So for us, because we are a payment institution and we already have clients and we have our processes, we try to include this technology into our mainstream business. So we're not here to provide it externally, but at least to incorporate it into our system.
So you're now in the learning modus for yourself?
For this, yes.
For this, yes.
And for us, we use Ethereum as well as our predominant platform, although we do work with all the major underlying platforms. A simple analogy I often use to compare Bitcoin to Ethereum, Bitcoin is a bit like a calculator. You have numbers in and you have numbers out, and that's pretty much about it. It's purely made for transactions, really. Whereas Ethereum is more like a smartphone. It's a platform upon which you can build any application. The result of this, then, this distributed concept, is you end up with something a bit like a world computer. Imagine every single member of that Ethereum network distributed around the entire world is a component of that application. So a bit like different parts of a computer working together as a processor.
Yeah.
So actually the power of Ethereum is colossal. It's the future of the internet, effectively. For us, we do have real customers. We've been working for 2 years now building solutions for both enterprise and small companies. And we work across various different sectors. So within financial services, we have banking clients. We're building a bank for a startup built on the blockchain. We've got trade finance platforms, payments, but also outside of financial services, we work in things like supply chain, the provenance, the origins of physical goods as they move along a supply chain, energy, health, aviation, legal. We work across all these different sectors. But the specifics here, of course, is banking and insurance. We are doing practical work and building solutions for that today.
How do I have to see this? Like, is it like these people all used Oracle in the past, and you say now we have a much smarter platform because it's a distributed database, and so you say put all your old gear away now. We will replace it with something more smart. Is it? I mean,
and this is the issue, right? Is that this is a complete paradigm shift of a technology. The traditional model is that you take whatever you've already built and you add on a plugin and you add something small on. My analogy I always use is a bit like a house. So every bank has built their own wooden shack about 50, 60 years ago. It was very inefficient, but it did the job at the time. And every single time there's a new piece of technology, they add another extension or another part of the house, another room, another floor. And eventually this house becomes enormous. The trouble is that the core of that house is still a wooden shack. This legacy issue, of course. Now, what do? Do you plug in a blockchain extension on one end and hopefully make something a bit better, a bit more efficient? You can, sure. But actually, the real power comes from when you replace the entire back end with blockchain technology for certain use cases. But is that ever going to happen? What bank do you know that you can go and say, right, let's just throw away everything you've ever built and start completely from scratch? Now, this is the issue in terms of the entire concept of today. Everything we've talked about today is pretty much around this modular banking concept, the fintechs and the banks and how they work together. So blockchain, in my opinion, almost requires a blank sheet of paper. It's the integrator. It brings everything else together and glues it together in a way that is much more compelling and much more efficient. So the question is, are banks willing to almost replace their house, or are they going to stand there and watch lots of smaller companies glue themselves together into a much bigger and more efficient house?
But I think just to build on what you're saying, I think it's a matter of maturity of technology as well. So we've been talking about blockchain for a few years now, but the reality is still evolving technology. You have new blockchains appearing, you have technology getting smarter, you had some issues, but are getting fixed. You still have some issues in terms of size being able to be processed, speed of processing of some transactions. So all of this is in progress. So it's not that the banks are necessarily, I'm not a lot into bank bashing, but I mean, it's not that the banks are not necessarily open to it. I think all the banks now have platforms and accelerators trying to monitor. So they try to have a foot into this. They understand something is coming up, but it's too high a risk as well to be able to transport a complete different system in something which is non-proven at a large scale that is required. So my view, I mean, by the time we get these shifts, if it's happened, we're still 4 or 5 years down the road.
Yeah, I mean, on that, I totally agree. And the solution that we've come up with is effectively plugging a very specific business case.
Exactly. Yeah.
It's really, really tough right now saying, oh, do you want one of these blockchain things? And someone goes, maybe, but where can I use it? Yeah. So actually, there's a real education piece first that needs to go on. And we call this a proof of value. This is where we sit with the customer for maybe 3 or 4 weeks, and we identify specific parts of the business where there may be a use case for blockchain. We then understand the specific process of today. We match it against the technology and work out perhaps 3 or 4 very top use cases where this could really add significant value. On that point, then, we then say, OK, now let's build a proof of concept. Let's actually start implementing. Rather than coming up with some idea and hoping for the best, we're actually identifying this through conversation.
But how do you do it with the regulators? Because regulators are most of the time very conservative and they're not really aware of what's happening in the new technology world.
Yeah.
How do you convince these people? Because at the end of the story, you will have to convince them too.
Well, to be frank, I think at the end of the day, the regulator looks at the systemic risk, right? So as long as the technology is behind it is strong and is reliable, at the end, the regulator has nothing to say, right? We're not talking about cryptocurrencies. We're talking about using distributed ledger technology, right? So whether you use a specific language or use DLT, for them it's irrelevant. You have something at the bank that at the back end that is working and on which you build your whole infrastructure. However, they want to make sure this doesn't pose a systemic risk into the system. So they need to make sure that it's reliable, that it's robust, that it's safe from different angles, and that it will not cause disruption into the overall banking system. I think most of the regulators are starting to look at it very, very closely. So in the UK, the FCA and the Bank of England have set up a sandbox. We see a lot of other countries doing this, trying to put in a sandbox, bringing in companies, startups, or even banks, doing some small testing, monitoring the testing, how it works, and then they publish regular papers on the progress of this. What new regulation is required to be around that? What are the new processes? Does it have an impact on the monetary policy in the future if you can put directly cash injection into people instead of the banking system? So there are a lot of things that are moving on, and the regulators are very closely monitoring this. Some of them are more proactive than others, but I think it's all going in the right direction.
Yeah. You already mentioned startups and accelerators are now also into these things. So we have this whole hype around fintech. I'm also organizing startup weekends and hackathons around fintech. But I mean, everybody talks about it, but when it comes to making your hands dirty, I don't see too many people doing this now. So is the startup world really going to change something, or are they just trying to nibble on the house, like with the little storyteller, and then they will go inside and get burned, or what's happening with this hype around fintech now?
Should I pick it up? I mean, statistically, you have 95% of startups that potentially go bust, right? And I think fintech is not different from opening anything else, right? At the end, it's a small business that needs clients and needs revenues that are superior to cost to survive. Of course, you can play a different game, which is the first round, second round VC money and survive for a long time before you generate revenue. But let's say the logic is that, right? So the discussion this morning again that came up in the C-suite or the banking is what's the role of the fintech, right? And how do they come into the overall banking space? And for me, it has been very clear from the beginning. I come from a banking background. I don't see the fintech space and the banking space are being antagonists or or clashing. I see the long-term play of the banks is really focused on the very large clients that they can serve very well, that the fintechs cannot serve, and leverage actually on the fintech to access markets or to access client bases in a more efficient way than they do as today. It's much more difficult for a bank to change their whole system, to change their processes, and to be cost efficient or to be more attractive to a certain client base than leverage on a number 2, number 3, number 4 fintech that will give them immediate, cheap, and efficient access to a client base. So banks will focus on, in the future, in my view, will focus on their large client base that are very too large, let's say, for fintech. And then will act as an infrastructure provider for a community of fintech or for an ecosystem of fintech that will develop. And I think the banks that really will position themselves well in terms of infrastructure play and opening up their infrastructure to the fintech space are the ones that will be the winners in the long run.
Yeah. I was actually so when Solomo was big, you know Solomo? Ever heard about Solomo? Social, local, mobile. So like 10 years ago, there was a big thing about, everybody was talking about Solomo. In South by Southwest in Austin was full of old posters and everybody did Solomo and nobody understood what it actually was. But there was one thing that I still remember there is that Google announced silently that they had bought a bank license in Holland. And the whole idea was that you can find money through a search. So, and when then I heard about the whole thing about blockchain, I was like, wow, that's actually, if you combine these two things together, I'm looking for $1,000, and then you have people who say, I can provide you $1,000 on these conditions, and it's peer-to-peer. There's no bank in between, there is no regulator, there's nothing in between. So it never kicked off until now, as far as I know, but that was for me like, wow, are we finally going to get other players into the banking system than the banks? So what is your opinion there? Because now we have technology who can do that.
Right, so this banking client that we're working with, the startup bank, one of their big focus points is around the unbanked. Now, why is it that the major banks don't serve people with a small amount of money? Right? They're not very profitable, of course. There's billions, if not at least 1 billion people in the world that are completely underserved from major institutions. So the key aspect here is how do you reduce the cost of acquiring that new customer and actually managing their account? Because of course it costs money. It's all for free for us, right? But it costs money. How do you then manage that in such a way that it is actually still profitable? And the current infrastructure doesn't really allow for that. Enabling peer-to-peer interactions using something like blockchain does. Just to give you an example, the model they're taking, imagine rather than having this centralized hub of the bank and everything else has to plug in and transactions go back through that centralized hub, instead, the bank is the supporting ether that holds up the peer-to-peer interactivity of both customer to customer, but also customer to banking service provider. The result then is you get something a bit like the app store of banking, and it's a completely different paradigm shift. The security of that is built into the blockchain itself through encryption, and it means then the bank is purely a service provider, a technology provider that enables this interaction, effectively reducing the cost of managing someone's account down to zero. The big difference also is that you as an individual, as a member of that network, become the bank. You have complete control of your own finances, of your own identity. It's down to you. It's not down to the bank to hold and manage that account on your behalf. You are a member of that network and have equal rights to do whatever you want to do within that, within the rules of the game. So it's a complete paradigm shift. And in that case, then, yes, peer-to-peer is the way forward.
So you also believe that it will come?
I think it will come, so long as there is, how to say this, mass understanding of really what this technology is. And I think that the difficulty around that is because it's pretty much a B2B play right now. Crypto is very much C2C or person to person, but blockchain is much more business applications and businesses dealing with businesses. So unlike the internet, which had mass adoption from all of us wanting to use it personally, you may not even know you're using blockchain. So how would you then get behind it as a movement and then say, right, let's actually capture this and make it something? So I think it will be slower, but I think when it does come, it will be profound.
Yeah. Do you think the same thing?
With some adjustments. No, I think first P2P is not applicable everywhere, right? So I mean, we see it, for example, in the payment industry, in the international remittance space, if you want. So there are some very large companies who try to focus on P2P, but at the end is 2 to 3% of their volume, and the rest has to actually come back into the more regular system or more classical system, simply because there are channels and there are flows that go one direction, don't go the other direction. So if you have a whole large population in the US, for example, sending money back to their family in Mexico, their family will not send back the money. So there's no P2P. You cannot net those payments. So you have to rely on the more classical system to work. But there are P2P lending platforms, for example. There are different other areas where P2P can and will work. And I think, of course, the underlying will always be a B2B because it will be a company that's offering the P2P. But I think there are some fundamental characteristics in the blockchain technology that will allow the P2P to flourish. And one of them, as you mentioned, is cost. The other is trust. And I think this is going to be central into some new offering, new products, new services being offered to the large consumer base in the P2P space.
So I think so. The good thing is, I mean, one of the reasons that people, the anarchists and the hippies, liked the blockchain technology is it is anonymous. I can do things that nobody can trace me. That's one of the things that they liked about it. So we talk now about all the possibilities in a positive way of blockchain and about the currency thing. So what are now the backdraws? I mean, we talked about you can only do encryption until a certain moment, because the government will say, if you go above this encryption, we cannot decrypt anymore, or you have to give us the key. So, but then, of course, then you lose the hippie argument that says, "Oh, it's nobody can find me." So, what are the downsides of this thing?
So on that, there's a really important point. It's a pseudo-anonymous network. So imagine Bitcoin today. You can see all the different transactions of every single person who's ever transacted on the entire network for the entire history of Bitcoin in the last, however long it is, like 9 years now. Fine, that's great, but not if you're a business. Imagine right now, I can see all the different transactions, but I cannot see the identities of the individuals. I can see their public key, I can see a number on a screen, but I have no idea who, as a person, is behind that. And you're right, it's anonymous. Actually, businesses want the opposite. You want to know exactly who you're dealing with, which organizations you're transacting with, whilst at the same time not having all your competitors see all of your transactional information and your private data. This is a real problem. So we've identified a way to solve that problem in the solutions that we build. It's a data privacy component. So it means you can encrypt specific items of data stored within smart contracts where you can provide permissioned access to the right parties at the right time. But in terms of a macro level, you're right, it's a real issue.
Yeah.
So it's a real revolutionary concept, right? Why is it the case that the government should see my data? Why am I not the one completely in control? Why does Facebook and Google have my information on my behalf, and they decide to go and spend, gain money, sell it, exactly. So I think there'll be a big locking of horns at some point between data protection versus data access, government versus individual.
Can you talk about the encryption, because we talked about it? So like there is this level of
for me, just the encryption level. So blockchain is not the first case, but I mean, it's the same. It has been the same case for even simple things like BlackBerry before. So BlackBerries could not go in certain countries or were taken down in some countries because the government could not access the encryption level.
Yeah.
I mean, it's very known in the US that you have to remain below a certain level of encryption so that you can commercialize your product, and it's the case in a number of different countries. So for me, again, we're coming back to the same story. Is there are two ways. One way is to say, I'm completely on this side. I don't want to be within the system. I want to be, as you mentioned them, anarchists, whatever you want to call them. And then it's a different business proposition. It's not even a business. It's a different proposition, right? If you want to bring that into the financial services, into the financial system, and make it scalable and growing at a level which is a business and respectable, then you will have to compromise on certain things, just for you to be able to have access into the financial system. Otherwise, it will just remain in my view, it will remain a side technology.
Yeah.
So it's all about, what's going to be the level of compromise that the technology versus the governments and the financial institutions on financial regulator will find into putting these technologies at a high scale.
But do you assume then, because now today it is possible, so this is just a question that popped up in my head when I was preparing this, so this means that I can assume that some people are using it now for that reason, who don't want to be known, who want to send money to somebody who don't want to know who that's going to get it, and we're talking about a lot of money. So actually that's what they can do now today.
It is. Now, I think for purposes of this conversation, we really are focused on the business application. It's how do we leverage this existing technology, which could be used in an anarchistic way, but then there are many technologies that can be used in an anarchistic way. And how do we then leverage that power and apply it into the space of financial services and business in general? So yes, there are drawbacks. There are pitfalls in certain areas, but also there aren't in some ways. As long as you're compliant and you're well within regulation and leveraging the power of a database effectively, there's a lot of gains to be had whilst remaining completely within the rules.
Yeah, nice. So I see that I'm already over my time now of talking, so I have to ask, who has a question now? Please.
Hi. I work for a financial lease company, and I think the smart contracts concept might be interesting for us, but of course there is no experience in Turkey in that area. So what are the advantages and also the difficulties of using smart contracts in financial lease, for example, other than being faster, for example?
Sure. So first of all, there's a miscommunication and a terrible term in the fact that it's called smart contracts. They're not smart and they're not contracts.
It's like smartphones. That's also totally wrong.
Yeah, right. So when people say smart contracts, you immediately think of like a digital or kind of code version of a legally binding agreement, and it's not that. So actually, we've looked into this quite heavily, because first of all, you still will always need a prose, as in text, legally binding agreement to establish terms and legally binding terms between different parties. Separate to that, a smart contract is a container, a technical container of code and also of data. So it's how do you leverage that code to do effectively a computing process that relates to business process. So the trick is then you've got lots of different parties, and how do you arrange it in such a way that certain things happen in the right order according to predefined conditions? That's it, right? It's very simple in some ways. So the answer to your question is around identifying where there are certain business processes that involve lots of different parties that have to verify or sign certain things at different times during that process. If you have that situation somewhere, and I'm sure you do, that can be combined into code where the different parties can verify, but digitally, at the right point in time, and even automate that process. So it can be done in seconds rather than weeks or months.
That's a good answer?
Yes, but it's answering the part of being faster. For example, in terms of payment, for example, it can somehow also be used, I think, if the payment is not done, okay, then we should be involved in that area also via the contract. So what is the use case for that? So how it is solved?
You mean if the payment isn't done?
Yeah, you know there are some these rents which should be paid in a certain time.
Sure.
Okay, if it's not done, for example, in some contract, for example, if you do operational lease, okay, you lease a car, the payment is not done, then you can lock down the car, for example. But it's the case for the operational lease. So in that area,
Great.
Are you familiar with the financial lease?
Oh, great. So you're basically taking the agreed terms from the legally binding contract and applying them into the process. Absolutely. Yeah, that's a perfect use case. Because you can take the numbers, the digits, the variables, and add them into the process. So in a simple flow chart, you'd have, has this been done, yes or no? And it splits, right? Same concept. It would split, and then you'd have the different processes that then get executed. So you could absolutely do that.
Yes.
I was curious about the use cases of blockchain in insurance. Do you have some use cases?
Sure.
I mean, in which processes?
So the claims process is one I do. We've recently written a white paper around this with a law firm, looking at the legal and technical implications, and how you can automate the entire claims process. So even from selecting a certain insurance company on a platform to making the agreement with them for the policy, all the way through to the claims actually being executed and money arriving in the customer's account. And that can be completely automated using smart contracts. So I could send you that if you'd like.
Yeah. So I think the example as well earlier that I gave on the airline companies, for example, where when there's an airline delay, basically the airline is liable to give compensation. Actually, at the end, when this is not done, it's picked up by the insurance. So it's actually the insurance companies now that are pushing for smart contracts and solutions that are implemented within the airline space, that automatically when there's a delay, then the passengers are compensated. So that's actually an insurance product.
That's also a contract, smart contract.
Yes, it is.
Enis?
How will initial coin offerings affect the overall funding and the liquidity market, and how will it be regulated?
For me, it's obvious. It provides more liquidity, right? Simply for one reason. Again, people are holding cryptocurrency, different cryptocurrencies. You know, I mean, they're also looking for places for their funds to be used and to be utilized. But obviously, the level of offering, the level of valuations you see at the moment in the initial coin offerings, you know, for me, it's a big question mark in terms of rational. But again, I'm not an investor there, so I leave it back.
Well, looking at it, there's a bit of a bubble. So for those who aren't aware, an ICO, initial coin offering, is basically the same as an IPO in some ways. But the idea is, imagine a combination of crowdfunding mixed with cryptocurrency, mixed with distributing that cryptocurrency suddenly and getting lots of money for it. It's kind of the idea. But right now there's a huge bubble where in the last 2 or 3 months, pretty much every major cryptocurrency has just spiked to a ridiculous amount. So the question mark is, as it is so anarchistic, will they even want to be regulation around this? I think we're quite far off. Right now, it's a very turbulent space.
And the hedge funds or the VC funds associated with ICOs and cryptocurrencies like blockchain capital or blockchain?
Well, these are very specialized funds, right? I mean, you will not, as of today, it's very difficult to find a mainstream fund or VC going into ICOs. Again, it's for different reasons. One of the reasons we always come back to is around transparency, right? So people want to make sure who are the co-investors, with whom they're investing, what's this funding about. There are some platforms that are already present that were specializing on raising funds through cryptocurrencies. Most of the time, people have to eliminate a good portion of the funds coming in, again, for regulatory reason or for compliance reasons, etc. So I think we continue for a moment. We'll continue to have two parallel systems that are trying to speak to each other, trying to communicate to each other, but still at the end are very segregated by regulation, by compliance, by anti-money laundering. So we need to make sure that this is bridged at some point, so that the whole world actually benefits from a very, very strong technology that's happening.
Yep.
Anyone? Very silent suddenly.
Can I ask a theoretical question about blockchain? Is it possible to disrupt the state with related projects like Ethereum? The state itself?
As in the government state.
Opinion.
They are very interested in the anarchist thing.
Yeah,
part of it,
In the future, maybe.
I think realistically, it's unrealistic. I think we're looking towards like the Hunger Games or something. This is. Let's hope that doesn't happen. So I think I don't want to answer that if I'm honest.
I mean, we don't look necessarily about disrupting the state. I think wherever you are, you try to be beneficial to the society, right? But I think it's not, for me, it's not unrealistic to look at the way you vote, for example, or the way the vote process is going. Again, in a lot of countries where you have potential frauds, you have things not happening properly, so you might see that a technology that brings more safety, more reliability into the voting process can be applied. So that also might be something positive, not to disrupt the state in a negative way, but in a positive way.
Maybe we should ask Richard Branson, one of his islands, and start a community around this kind of technology. That might be the start as a new society. So I see that our time is up. Many thanks, because it was really very nice, and I learned a lot again. I hope you did the same thing, by the way, that you also learned something from this. Thank you very much.
Thank you.